Today we are going to compare my setups on TradingView and my executions on MT5. Okay, so and the reason I'm doing this is because I have these errors have been preventing me from the next level in terms of consistency. So if you look at Monday, we had price opened with this huge gap right here. So it's normal for the market to reprice and fill this gap the market open. But then again, there is models. It might fill at market open, or it might fill in another session or another day. So that doesn't prevent me from executing on short setups if I see them. But when this setup here showed up, I hesitated to execute, anticipating that it might reverse and take previous high, short-term high here. But it didn't. After closing, I was supposed to execute at that level, target below this low. You can see it was a clean 1:2 risk to reward ratio, but I missed out on that one. Price retraced. Then I didn't anticipate this as an expansion. I thought since it had taken this sell side liquidity up here, this was just a retracement. Keep this as a protected low, then our price would run for this high. So I got my setup. I got a sweep or a stop hunt below this short-term low here, and price closed bullish above this two down close candles, which makes it a change in state of delivery. So executed my buy setup, buy trade, and stop loss below this low. But I didn't go to the to any higher time frame, maybe above a single time frame above the 5-minute time frame. So I didn't see this fair value gap on the 15-minute time frame. So when you go to the 15-minute time frame, you'll see this 15-minute fair value gap. So for it to respect, if it was bullish, it had to close above this 15-minute fair value gap, but it didn't. So it used it to run below this short-term low right here. So my setup ended up losing. But as it was starting to reverse, I went to the 15-minute time frames on this fair value gap, and then I thought it was going to violate this low. So I got out manually before it went for the stop loss. See the execution. So this was the two trades, running trades. So after price reacted from that 15-minute fair value gap, it also closed below this bullish fair value gap right here on the 5-minute, which made it an inversion fair value gap. So I got out. No regrets there. That was a setup well executed after missing out on this one, a winner. So I took the first hit, a small hit. Then I came on the second setup, same session. This was about 7 a.m. East African time. So I came here with this trade. So let's go into the 5-minute time frame because that's where the setups are so much cleaner. You go to the lower time frame, we have this short-term low light here. Price trades below it and closed below or above the opening of this bearish candle right here. So which marked a change in state of delivery or CSD. So my instinct was to start looking for buys. So instead of placing a buy right here and stop loss below this low, because once price takes liquidity below a short-term low, the candle that takes liquidity becomes a protected swing. By a protected swing means it's safe to place a stop loss there. So I would have entered there, my stop loss there, but then I was not confident with this setup. As you can see on the lower time frame, 5-minute time frame, this was a kind of it was going as if it was coming to invalidate this low. So I was hesitant on entering buys, and my target would have been on this short-term low. The high that went into the 15-minute fair value gap was in the short term a protected high. So that's why I was targeting this inside the candle that started the move down here to take this sell side liquidity. That's why I was taking that high. So I end up getting in around this point, and I had my first stop out. Then I get in again. Can see the mistake or the errors in the executions. I enter. Stop loss was supposed to be here, but then I don't want to lose, so I set it closer. Price comes, stops me out, then starts moving in my favor. I enter again. Then during this candle open, it opens aggressively that I think now it's time. You see that fight or fight moment. I think now this is going to take this low. But then again, it shifts bullish. And so since I had gotten out, I had to enter again. But you see, if I had entered here, my stop loss would have, my take profit would have been above this high. So I would have had a clean 150 points. But the higher I enter above this opening price, the more I had to target above here to hit that 150 points. So you see, my target was just above, way above. It missed by a few pips, and I had moved now the stop loss from this point. I would move it closer to these consecutive up close candles open. Okay, so price ended up stopping me out, and then you can see I would still have lost if I did, since the price had not hit take profit. So I ended up losing on a setup that was a clean winner. As you can see on TradingView, it's a clean winner, okay? If I didn't micromanage it and if I pressed the stop loss where it's supposed to be, okay? That would have been a winner. It would have helped me recoup the small loss that I took on this setup here. Remember, I didn't execute on this, so there's like no buffer to fall back on this losing trades. So after this loses, now it's about London Open at 9 a.m. East African time. At 9 a.m., we have price trade below the 7 a.m. low here, which basically, let's say it's Asian low. Okay, price trade below Asian low, takes liquidity, and then closes back inside the range. So if price takes liquidity and closes inside the range, we assume it wants to continue now to reverse and aim for bullish higher these swing points. Okay, when price is bearish, you see this high is lower than this high, so it's lower highs. So price is going to be aiming for these lower highs, buy side above these lower highs, right? It's a lower high because this high is lower than this high right here. So price will be aiming to target those lower highs. So once liquidity is taken, this is a signal to go for buy signals. Okay, so you end up actually the signal was supposed on this candle open, right? And the stop loss right below this low. Take profit just above this high. Okay, you see, this was a clean executed winner. To go to the MT5, right after the close of this bullish candle, we go buys and the target above this high. So you see, this is an example of an executions. I didn't micromanage or try to do something different than what the model says. So I took this winner, helped me recoup the losses I've taken here. So I am at break even. But then again, remember I opened up by saying when price opens with a gap, it tends to go back to fill this gap. So with this momentum, I forget about my model and start looking for continuation right after I close the trade. A few minutes later, I'm looking for a continuation to go and fill the gap. What happens? Market retraces, and you can see the momentum. It's like an illusion that this is just a retracement, and then price will come and start taking these highs. What happens? It gets to a point, gets sad. What does it? It rips downwards. I'm stopped out. Okay. Now, once this happened, I stopped looking for bullish prices and instead I closed the charts and focus on something else. But this was not a big damage because I just lost $30 on it, just $30. And here I had made $100. So you can see it took some profit from this winning trade right here. So that was the last setup of that day. And these execution mistakes are what have been pulling backwards in terms of finding consistency while trading gold. Because as you can see, the model works. Okay. And imagine now having a model with more than 4 to 5 setups in a trading day, and the least is a 2R. This is a 2R. This is a 3R. Okay, this is 3R. This is a 2R. This is another 2R. So you have 2 plus 3 plus 2. That's 7R minus 1R. That is 6R. So if executed all these setups correctly, then at the end of the trading day, I will be up 6R. But as you have seen, at the execution of this trade, I was already at break even after having all these winning trades on TradingView. My MT5 executions says otherwise. So this is still something I'm working on, and I think by the time I'm done working on it, then the consistency will start showing off. But for now, I think I have to live with the fact that these mistakes do happen and aim to work on resolving them one by one. So this is just one part of the mistakes. It had nothing to do with bias. The entry level was correct. The bias was correct. The stop loss placement was maybe the problem, and the lack of a take profit at a sensible level damage done on that setup. So even though it was a profitable trade, I ended up taking a loss. Okay, so that's one part of the mistake. So on the next one, we will cover the other mistakes that have been holding me back on finding consistency. That's all for today. Have a great time.